If money feels confusing, it is not because you are broken. It is because you were never handed a simple operating system. So let me offer you one, starting with a blunt truth I learned early in life. Most people are not bad with money. They are simply running their household without a system. And when you run anything without a system, the leaks do not feel dramatic day to day. They feel like normal life. Until one day you look up and realize you've been working for years and you still feel fragile. And if you have felt that way, I understand it, as I have watched it happen to friends, employees, and plenty of families who are doing their best. But I have also seen the opposite, where ordinary people build extraordinary stability when they do a few simple things consistently for a long time. So here is what I want to give you. Not a perfect plan, but a workable plan. A 90-day reset that turns your finances into something that behaves like a well-run business. Where in business, you do not guess your revenue, you count it. You do not hope your costs stay reasonable. You measure them, and you do not wait for an emergency to discover you are undercapitalized. You keep reserves. And that is the mindset for the next 90 days, where you are going to become the chief executive of your own financial life. And like every CEO, you will do 3 jobs well. You will know your numbers, you will build stability, and you will allocate capital with discipline. So now, I will walk you through 12 weeks, where each week has one primary job you can do in a couple of focused hours. And the goal is not to feel busy, but to build a machine that keeps working. After your motivation fades, beginning with week 1, the honesty week, where before we fix anything, we need to see what is true by pulling up your last 3 months of bank and credit card statements, not 1 month, because 1 month can lie to you. But 3 months tells you the pattern, and your job is to categorize the spending into housing, food, transportation, debt payments, subscriptions, entertainment, health, and a category I call silent leaks. The small purchases that don't feel dangerous but add up fast. And do this without self-hate, because this is not a morality test, it is accounting. And a good business does not insult itself for having expenses. It simply asks which expenses create value and which are waste. And when you finish, write down 2 numbers: your monthly take-home income and your average monthly spending. And if spending is higher than income, you have identified the exact reason you feel stressed. And if income is higher, you have identified the exact fuel we will use to build wealth. Then moving to week 2, the cleanup week, where in week 1 you found the leaks, and in week 2 you plug the easiest ones first by canceling anything you do not use, negotiating what you can like insurance, phone plans, and internet plans, because most companies will lower a bill if you ask, counting on you not asking. Then take one category and cut it deliberately for 30 days, not forever, just 30 days, because it is much easier to keep a promise for 30 days than for a lifetime. And at the end of week 2, you should have freed up some cash flow. Even $50 a month matters, not because $50 changes your life overnight, but because it proves you can control the direction of your money. Then week 3 is the automation week. Because when people tell me they will save whatever is left, I know what happens next. What is left becomes zero as life expands to consume the whole paycheck. So you must pay yourself first by setting up a high-yield savings account for short-term money you may need within 1 to 5 years. Then setting up automatic transfers so that on payday a percentage moves without you thinking about it. As automation does 2 things. It removes decision fatigue and it protects you from your future self on a tired day. And if you only do one thing in this entire plan, make it this. Make saving automatic. Because a system beats willpower, then week 4 is the consumer debt week, where high-interest debt is a tax you volunteered for without realizing the cost, and credit card debt in particular can turn a small mistake into a long sentence. So write down each debt, the balance, the interest rate, and the minimum payment. Then choose a payoff strategy, either the smallest balance first method because it creates momentum, or the highest interest first method because it saves the most money. And either can work, as the right method is the one you will follow. Then make it practical by increasing your payment. By a small amount you can sustain. Even an extra $50 or $75 a month can shorten the payoff timeline and reduce total interest dramatically, and then automate that payment so the debt begins to die quietly in the background. Then week 5 is the emergency fund week, because most financial stress is not about luxury, but about surprise, like a car repair, a medical bill, a job change, or an unexpected flight. So we build a buffer. And if you have no emergency fund, aim for your first $1,000, as that number matters psychologically because it turns "I have nothing" into "I have a base." And if you already have $1,000, your goal becomes 3 to 6 months of essential expenses. Not your perfect lifestyle, but your essential lifestyle, including rent or mortgage, utilities, food, transportation, insurance, and minimum debt payments. And this fund should sit in a safe place, ideally earning interest, as you are not trying to get rich with it, but trying to stop being fragile. Then week 6 is the investing setup week, where over a very long period, ownership in productive businesses has done well, which is a polite way of saying stocks have historically been one of the strongest wealth-building engines. But the real secret is not picking genius stocks, but consistency and time. So if your employer offers a retirement plan, learn how to use it and contribute regularly. And if there is a match, understand that it is part of your compensation, a raise you only get if you participate. And if you do not have a workplace plan, you can still invest through other accounts, as the exact wrapper matters less than the habit of low-cost, diversified investing held for a long time, which tends to beat frantic activity. And remember this: you do not invest money you need next month. You invest money you can leave alone, because investing punishes impatience and rewards endurance. Then week 7 is the growth week, where you can only cut costs so far because there is a floor, but your income does not have a ceiling. So in week 7, you choose one lever that increases your earning power, like a skill that pays more in the market, a certification, a project you can use to ask for a raise, or a side service you can sell on weekends. Not 10 ideas, but one idea you will actually execute, writing down what you will do, when you will do it, and how you will measure progress. Because I have seen people transform their finances not by living like monks, but by becoming more valuable. And in the long run, value creation is the cleanest path to higher income. Then week 8 is the target week, where now that you have a basic system, you set a clear savings goal for the rest of the year, a real number, a deadline, and a reason. Whether it is an emergency fund milestone, a down payment, debt freedom by a certain month, or funding a business idea, and then translate the goal into a monthly amount. So when the goal becomes a monthly number, it stops being a fantasy and becomes a plan. Then week 9 is the credit card week, where credit cards are tools that in the right hands are efficient, but in the wrong hands are expensive, so you must know yourself. And if you can pay the full balance every month and automate the payment, then a credit card can provide rewards and build credit history. But if you carry a balance, the interest rate is a quiet predator that eats future options. So the rule I like is simple. If you cannot pay it in full this month, do not buy it on a card. And that rule is not about deprivation, but about refusing to borrow at punishing rates for things that fade quickly. Then week 10 is the net worth week, where a business tracks its balance sheet, and so should you, as net worth is just assets minus liabilities, not a scoreboard for ego, but a dashboard for decisions. So add up your cash, your investments, and the value of big assets. Subtract your debts, and that number is your current position. Tracking it monthly or quarterly, so you will be surprised how motivating it is to see the line move in the right direction, even slowly. Then week 11 is the review week, where we go back to spending because the first review changed your awareness, but awareness fades. So look at your spending for the last 2 months. Compare it to the baseline from week 1 and ask if you plugged the leaks, if new leaks appeared, and if your automatic transfers happened as planned, because this is how you keep a system from drifting, not needing perfection, but periodic correction. Then week 12 is the stretch week, where now we aim higher with 1-year, 5-year, and 10-year goals, not because you can predict the future, but because direction matters. As a 1-year goal might be saving $10,000. A 5-year goal might be buying a home, starting a business, building a serious investment account, and a 10-year goal might be financial independence or simply the freedom to choose work on your terms. So write your goals, then write the next step that happens in the next 7 days, because dreams without the next step are entertainment, while dreams with the next step become a project, and that is the 90-day reset, which is not glamorous and not designed to impress strangers, but designed to give you control. And here is the most Buffett thought I can offer you. You do not need 100 brilliant moves. You need a few sensible habits repeated while time does the heavy lifting. And if you can build a system that saves automatically, eliminates high-interest debt, keeps a cash buffer, and invests patiently, you will be ahead of most people, not because you are smarter, but because you are more consistent. So start where you are, make the first move this week, and let the next 90 days change the trajectory of the next 10 years. Remembering that when I was a kid delivering newspapers, it was not glamorous, but it taught me something practical. Cash flow matters, as a route works because the money comes in regularly and the expenses stay predictable, and your household is the same. For once you know the schedule and the numbers, you can run it calmly. Until then, every surprise feels personal when it is really just a lack of structure. And having been around wonderful businesses for a long time, most of them did not become wonderful because management worked harder every day, but because they created processes that worked reliably. And that is what you are doing here, building processes for your money. And once those processes exist, your future becomes easier, not harder. And I have watched people chase the perfect budget, building spreadsheets like a cathedral only to stop after 2 weeks. But a simple plan you repeat is worth more than a complicated plan you abandon. So if this plan feels too big, shrink the step, not the goal. Doing week 1 in 30 minutes instead of 2 hours, but just do it. And let me give you one mental shift that helped me for decades. I stopped thinking of money as something I had and started thinking of it as something I allocated. Because allocation is a business word that forces you to ask, what is this dollar's job? And when you give dollars jobs, you stop wondering where they went. They went to the job you assigned, or they went to a job you didn't choose, and that is the whole game in one sentence. And another point most people ignore is the cost of chaos. For if your bills hit at random times and your savings happens when you remember, you will always feel behind. And a good life is not built on constant vigilance, but on routines that do not ask for daily heroism. Which is why automation shows up so early in the plan, as it is the closest thing you will ever get to financial gravity. Once set, it keeps pulling money toward your future. And I also want you to be realistic about the emotional side, where some weeks you will feel motivated and other weeks you will feel tired. But that is not failure. That is being human. So every step we built is designed to work even when you feel ordinary, which is why we keep the task small and the system mechanical. Because a system that only works when you are inspired is not a system. And if you are married or share money with someone, you must talk about it plainly, as money problems are often communication problems wearing a different costume. So pick one evening with no blame, no drama, just numbers and priorities, and ask one question. What would make us feel safer 6 months from now? Then build the system together. And finally, remember that getting rich is not the real goal. The real goal is freedom. Freedom to handle emergencies without panic. Freedom to say no to bad deals. Freedom to take a better job or leave a worse one. Freedom to help your family when it matters. And a 90-day reset is a small chapter, but it can start a long story of freedom. So I will say it again in plain English. If you control the small decisions, you control the big outcomes. A budget is not a punishment, but a steering wheel. Your goal is not to become obsessed with money, but to spend a short season building order so the rest of your life has more peace. And if you fall off for a week, do not quit. Return to the system, because the market punishes panic and life punishes quitting. And the best time to start was years ago. But the second best time is today. So begin with the truth in week 1 and let the rest follow. With a final reminder to keep it simple, automate what matters, avoid high-interest debt, invest patiently, and let time do what time does. If you control the small decisions, you control the big outcomes. A budget is not a punishment, but a steering wheel. Your goal is not to become obsessed with money, but to spend a short season building order, so the rest of your life has more peace. And if you fall off for a week, do not quit, return to the system, because the market punishes panic and life punishes quitting, and the best time to start was years ago. But the second best time is today. So begin with the truth in week 1 and let the rest follow, with a final reminder to keep it simple. Automate what matters, avoid high-interest debt, invest patiently, and let time do what time does.